Okay, well, Cardano has hit its take profit area from the previous technical analysis videos that we've done on the channel, hitting a high of 81.8 cents, a 24.89% move to the upside since Wednesday. Pretty good. It's in line with the rest of the crypto market and does kind of look to complete out its structure. Okay, now following on from the previous technical analysis videos that we've done here, for Cardano, we were talking about the importance of 77.44 and 72.9 cents areas. We were talking about this area being the area between kind of 70.25 and 71.43 being the area of an ABC structure where we would typically be looking for rejection. We saw a little bit here, and which is why we lifted the stop loss up to entry or into the take profit area around the 200 exponential moving average to see if we could capture any more of this upside. And well, we have come up into those higher range of expectations, which is between obviously the 77.44 to 81.25. We overextended it a little bit, and it doesn't necessarily look like it's finished just yet. So let's go ahead and clear this off and talk about the opportunities that are now presenting themselves. There's a few interesting structures appearing right inside here on this hourly chart. So let's go ahead and take a look at this most recent price action. Let me actually just go ahead and put that back. So in here, we can see that we topped out at the high coming in at 81.8 cents. We then obviously started to see rejection to the downside, lots of overlapping within the price action here, kind of classic kind of situation going on. So we do have lower highs coming in like this, and we have lower lows coming in like this. But you can see how this is basically looking like a falling wedge pattern. This is going to be a bit of a continuation. So with the overlapping nature of the candlesticks, this consolidation coming in down here, the expectation is going to be for another push to the upside. So I look at this structure through here with the idea of this being a wave 4, and we have another wave 5 a little bit higher. Now, have we bottomed? Not necessarily. I think we can still see a little bit more slippage, specifically over the weekend. So maybe today's going to be a little bit of a boring one, going into kind of a weekly close a little bit stronger. It'd be interesting to keep an eye on that. So I look at this and I think, okay, there's the potential for a bit more of a move to the downside. Maybe we're going to come down towards kind of 76.5 cents, something like that. I'm going to use the existing low as our benchmark though, because the lower that wave 4 goes, the higher that wave 5 goes. So if we want to be conservative, we'll just use the existing low. And we can kind of predict out a move somewhere into this slightly up at range between 82.97 and 84.89 cents. Right, so that's the target range that we now have, which means that we can, of course, look to trade it if we wanted to. Let's just take market entry at the point of recording, coming in at around 77.82 cents. It's actually a little bit lower, but you can kind of get the idea. We'll call it 77.75, right? Now, if we put the stop loss lower than the 50 EMA, 50 SMAs down here, and we target out that lower side at around 82.97, well, here we can see a 1.89 risk reward ratio. So there's definitely some possible scenarios here, but I suspect that actually we can get a better entry by waiting. But if we're impatient and don't want to, we could layer in a few longs if we wanted to, with stop losses in the correct areas. So in this particular example here, we're talking about entry at around 77.72 cents, stop loss at around 74.98, and take profit at 82.98. That there gives us a 1.92 risk reward ratio. But like I say, I think we could probably have a better entry, maybe even target out somewhere around 76.8 cents, giving a risk reward ratio of 3.4, right? Which obviously the higher the risk reward ratio, the better that's going to be for you. It means your stop loss is going to minimize your losses and so forth with still maximum upside. So it's looking good, right? So that's going to be my approach to it. And of course, if I am to be trading that, I am going to be trading it or at least communicating the trade down in the profit pit of our free Discord server. For anyone who doesn't know, essentially the profit pit is a channel in the Discord server. There's a link to that in the description down below. And you can gain access to that particular channel if you are signed up with one of the exchanges through the affiliate links in the description. So that's BitGet, Blowfin, BitUnix, Mexi, etc. If you're signed up to one of those using one of our links, you can gain access to the Profit Pit, where we communicate in real time our entries, our exits, our stop losses, our leverage, all that kind of good stuff. Everything you need to know about what it is we're trading in real time. Any changes that we're making will also be communicated there in real time. Okay, so that's the place to be, right? These videos, they're kind of recorded a good kind of 3 hours ahead of time, right? So if you want to get the ins and the outs of exactly what is going on, then that's the place to be. So go ahead and check it out. Links are all in the description down below. Let's go ahead and just zoom out of this for a moment. Okay, so what are we actually talking about here? Well, what we're talking about is a wave 1, wave 2, wave 3, wave 4, and then wave 5. Now, is it possible that we've already completed this? Yes, it is possible that we've already kind of completed out the 5-wave structure. However, I'm looking at the internal workings and I think to myself that actually it's probably unlikely that we have completed it just yet. Possible, yes, but I think it's unlikely. I think actually we still have this last little push to go. This, of course, completes out the 5th wave movement that we've been tracking for a little while here within this structure, as we can kind of see. A bit of an irregular wave 4 situation, but this is the beginning of a much bigger structural points to the upside, which we are tracking. Okay, so taking a look at everything here, it's looking good. This is, of course, going to be a part of a much bigger play. The bigger play being that this actually could just be a zigzag pattern, actually thinking about it, but nonetheless, or diagonal based pattern, I should say. So it's going to be an interesting one to see how this kind of plays out over the next little while. Let's actually roll this up into a daily time frame though, because on the daily time frame, we can cut through a lot of that noise and we can just pay attention to the bigger macro picture. Right here, we can see that we broke our downward trend. This is the second time that we've done this, right? So our trend line, I should say, right? We have lower lows and lower highs on this time frame, right? We've had a couple of breakouts to the downside and to the upside, so a breakdown and a breakout, and this is another breakout situation, right? Now, the thing with the trend lines and the problem with the trend lines is they are subjective, right? You can just continue to move them as long as you've got a couple of touch points. You've got a trend line, right? They are the weakest technical analysis tool out there, in my opinion. They're so easy that anyone can draw them, and therefore anyone can draw them incorrectly, right? And so it's important to understand that there's a narrative or a bias that actually kind of just shines through when you use a trend line. So they're absolutely rubbish tools and wouldn't really recommend it. But what they do allow us to do is just visualize one clear and key thing, which is the overlapping nature of the candlesticks. Now, that overlap actually is what tells us everything we need to know. And that is that this move to the downside, although it is lower highs and lower lows, can be scary, is actually a short-term move. And yes, when I say short-term, even trading from here in December to where we are today, a total of 157 days, is still short-term. Okay? We are not in a long-term downward move, as many people would try to kind of make you believe, right? We are actually in an overlapping candlestick nature, which tells us that the market is just bouncing around. There is no trend here. Okay, it's not trending down and it's not trending up within this 157-day period. Okay, so the overlapping nature of the candlesticks, it's short-term moves down, short-term moves upwards, and it kind of just rinses and repeats. Although it's gravitationally looking like it's going down, it actually isn't trending at all. Okay, so the use of a trend line here would be pretty poor. Now, one of the other key things that we need to kind of consider is that what led into this was a zigzag pattern, an ABC structure, which you can see from over here. Okay, so we had the 2023 lows up into the 2024 highs, then down into the 2024 lows, and finishing off the end of the year really strong. Right, this move to the downside here, been a little bit boring for some, but we finally see a little bit more of a resurgence to the upside. Now, this upside move is still in a bit of a danger zone, but is now firmly back above the 200 exponential moving average. The question becomes, is it going to hold the 200 EMA? Now, the 200 EMA currently sits at 71.18 cents and is the trend filter from a traditional aspect of looking at technical analysis. So if you're above your 200 exponential moving average on a daily time frame, then you can be confident in the kind of trend being a more bullish one. And when you're below it, you're kind of bearish on the market, right? Now, this is, of course, subjective again to a degree because it's just psychology, right? Basically, the 200 EMA is the last 200 candles weighted slightly more aggressively towards the most recent price action. Unlike your moving averages, which are just like, let's say, a 200 MA rather than EMA. So your MA is just going to take 200 candles. What's the average of it, right? So the exponential moving average is weighted slightly more heavily towards the current price action. So people look at that as like a trend filter, but ultimately it's only showing showing you what's already happened. It's not really giving you any kind of predictive capabilities, but what it is going to tell you is how, or it's going to help you understand how people are going to react to whether the price is above it or below it. So people use it as a trend filter. Again, it's not ideal, but it is kind of what is getting used. But for me, I take a look at the candlesticks, the behavior of the buyers and the sellers, and we take a look at the overlap that is being created over the last few months. And it's quite clear that we are not trending to the downside. And if anything is clear to me, is that we had a good strong move going into 2025, and that actually is more important because we could also look at the current situation for ADA and think about it as a continuation pattern. Continuation meaning that when it stops being this kind of overlapping candlestick nature, we continue what led into it. And what led into it was a fantastic 5-wave move to the upside, right? And so that's kind of what we're looking to see here. Now, we haven't had that yet. Even though we've moved out towards 80 cents, we haven't had that kind of clear impulsive trend-based structure appear on the daily time frame. Okay, we've had little moves as we indicate on the smaller time frames, but we haven't really seen anything on the daily time frame just yet. Our stochastic RSI, it's overbought. So we want to be thinking rejection around here and a retest of that 200 EMA and see whether or not we can hold it. Okay, so although I suspect there's still a little bit of a push to the upside, we are actually nearing the end of this move, and we want to be thinking about actually taking some profits potentially and retesting the 200 EMA, a nice healthy pullback before maybe launching a little bit higher later. So EMA is interesting, the stochastic RSI interesting, the relative strength index here not yet overbought, but again is quite high, above 50, so it's bullish territory, right? But you know, we were also in a very similar situation on March 2nd, so we can continue pushing up for sure, but I don't think there's a lot of longevity to this at this stage. Could be wrong. We'll see how it kind of plays out. The MACD histogram also shows us with some bearish divergence. What do I mean? Well, we have higher highs most recently here. As you can kind of see, if I draw that onto the chart, let me go ahead and zoom in just so you guys can see, right? So we have higher highs on the price chart, right? Our swing high on the 24th of April and yesterday's swing high on the 9th of May, right? We have higher high on price. But whilst we have higher high on price, we have lower high on the MACD histogram. This is divergence. It shows that although price action's gone higher, the underlying momentum behind the price action is weaker. This is an indication that actually this is going to be a short-lived move to the upside. So, okay, great. We've kind of got a breakout of the 200 EMA. We are overbought on the stochastic RSI. The relative strength index is also sat quite high. We have higher highs on price, but lower highs on MACD histogram. We're coming to the end of this move. Right? That's my conclusion here. So we want Cardano's price action to continue rallying. We want it to do very well. We want it to continue mooning. But the reality of the situation is this move isn't really backed by a substantial amount of momentum, and so can fizzle out. So unless that changes, my expectations is a final push up, 82 to 84 cents, and then back down towards 70 cents for a retest of the 200 EMA. Okay, that might not be what we want to hear, but it is ultimately what I think is likely to happen when it comes to Cardano ADA's price action. Now, of course, this is still, in my opinion, relatively short term because it's a daily time frame. It's not a big macro weekly or monthly time frame, but it is going to take a few weeks to correct itself. So if we bring this to a weekly time frame, well, they actually start to look a little different. I don't know if I can actually take that arrow off because it's in the way. Right here. So on the weekly time frame, things are not actually anywhere near as bad. It came down, price action came down, bounced on the 200 EMA in February, bounced off the 200 EMA in April, and is now firmly above the weekly 50 EMA, 50 SMA, and 200 EMAs. They're all in a really strong position. MACD histogram is obviously cooling off after a bit of a sell-off pressure. So this hasn't even flipped to green yet. Very interesting stuff. Stochastic RSI, huge amount of momentum to the upside. So if we're talking about a correction on the daily time frame, it's going to be just that. It's going to be an intraday correction and not a major move. The relative strength index also now above the 50 area after hidden bullish divergence on the weekly time frame. we're actually in a really strong position on the macro level. So expect some volatility, and then I expect that volatility to turn into a bullish breakout. Okay, I do think we're getting very close to it. We're probably only really a few months out from some pretty decent numbers, in my humble opinion. So we want to be bracing ourselves. I think on the hourly chart, we have the ability to be thinking that the price action is going to be moving to the upside, right? We're going to be looking for somewhere between 82 and 84 cents. On the daily time frame, once that completes, we're going to have to be thinking about a correction back towards the 200 EMA, about 70 cents or so. And that's going to gear us up for a bigger breakout on our weekly time frame, taking us out significantly further, where I am looking, out towards some of these juicier numbers and new all-time highs a latter part of the year. Okay, so that's going to be it for today's update on Cardano 𝗓𝗓. You can let me know your thoughts in the comments below, or join us in the free Discord server linked in the description, and I'll catch you all in the next one.